Good morning, traders. Welcome to the TMT stock market strategy video for Wednesday, April 12th. All right, markets got spooked a little bit in the morning, but just like I've been mentioning, markets rebounded again to pare a lot of its losses from the morning session. Now, what does that mean? I want to dissect that. I want to go over a bunch of stuff. I want to go over some of the trades that we had in our trading room, our Pro Trader Premier video, and our daily strategy video, which I'm giving to you today instead of end of the week because Friday is a holiday. So this is free for you guys, for our free subscribers, just to show you what's going on and what you're missing for $15 a day on a daily strategy video. That's 50 cents a day. Pro Trader Premier videos, $2.30. And of course, if you're really active in futures, you should join our trading room. It is bar none, guys. This is an algorithm that we've created in 2009, and it's been in its existence since then. This is not something that we've just created and goes by the waistline. This is something that we actively use on a consistent basis. So please check us out at the website, tradingmarkettechnicals.com. And again, I put out once a week for free these videos so you can get a good handle on what we're doing. Now, I want to show you some of the trades, but I also want to just talk about briefly of what we were talking about to our subs at Trading Market Technicals. I do believe that based on our technical view, that this fourth wave is a fourth wave minor pullback, and I really do think that we're probably going to move higher. Now, you may say, well, Mark, we're really not going anywhere. We're still making lower lows and lower highs. We have negative divergence. Absolutely true. We try to rally and then we sell off. True. But yes, we also, buyers of dips keep coming in. So until the buyers of dips subside and get burnt, meaning that they keep buying and then they get burnt and they average in and then they lose everything, the market will continue to defy gravity. Now, we are, I believe, in a fourth wave minor pullback that we have now hopefully completed to get that capitulatory top, that basically rip your face off rally. Shorts capitulate. We have the retail crowd coming in. And why do I say that? Well, if you know what market dynamics are about, and this is what we show you here at TMT, and for 30 years doing this, you could understand what the markets are doing, get an idea. You're never going to master the markets. You could be a student to the markets, but you can make a great living, but you'll never master the markets. There's very seldom few that do so. But if you understand the market dynamics in this current market condition, you could understand and you can get a good feel of what is to come. Now, I believe, based on, again, our technical view, that we are in a fourth wave minor pullback within the big, larger fifth wave completion of this full bull market run. Remember, we have FOMC minutes that stated we are reducing our balance sheet, hence reducing QE, okay? Markets are not even spooked. The serious strikes rallied right back up again. This is where I say that the markets are only based on sentiment, on the Donald Trump trade. Okay, Donald Trump has done nothing. He's trying. Don't get me wrong. I'm not saying he isn't. He's trying. But we are doing nothing. We're getting nothing done. And the markets have rallied immensely since the November election. And all of a sudden, we're still going higher. That gives me evidence that we're not done going higher on the upside. Now, why? Number one, if you look at inflows, let's see. Let me backtrack a little bit. Managed money outflows is the largest in 5 years. Okay, meaning hedge funds, any type of managed money, investment advisors, whatever you want to call managed money. And that's part of the category. Money is coming out of them. Where's it going? We have the largest inflows of ETFs in 5 years. What does that tell you? The retail crowd, okay, and please forgive me, the retail public, which is the dumb money, are doing it themselves because it's so easy. They just put their money in the stocks, in the ETFs, and forget about it, and they're going to make money. What happens is when the market does correct, there's nobody to pull the trigger for them. And what they do is freeze. I'm down money. Don't worry, buy the dip. I'm down more money. Don't worry, average in, buy the dip. Until the market doesn't come back and it capitulates, and now you're down 20% of your portfolio, and the market overall is down 20%, and we've entered a bear market from the highs. Okay, this is why I say let us do your analysis work for you. We've had professional markets. We've been doing this for quite some time. Let us define where we may think that something may be brewing in the market top, and we will call a top at one point, not until we get more evidence of price. So getting back to where we are, it smells really fishy that I think we go up again. After today's move, and we've rallied again on negative news, that's what they want. Who's they? The mutual funds, the portfolio managers, the large, very large hedge funds that want you to believe that the markets are not going down. The fast money guys on CNBC itself, the propaganda that goes on out there. Don't let them fool you. Manage your own money according to your own risk style, okay? Don't let them fool you. Kramer, for that matter, sold out to the retail public. He'll tell you what they want to hear. That's it. Because of ratings, advertising dollars. So just please be careful. I see it all day and I shake my head. We're at 26 times earnings. And I mentioned to you, I mentioned to the subs in another video that we've had, and I'm not going to mention the analyst and the firm saying that we're going to be to 27.50 by the year end. That's another 15% from here. What is wrong with people? Can we get there? Yeah, of course we can. Why would you say something like that until you had more evidence? I mean, it's just really insane that people today who are supposed to be professionals don't act like professionals, okay? It's all about the number. It's all about the mighty dollar and the buck, okay? So just please be careful. Don't even listen to me. I want you to do your own analysis. If what I'm telling you you agree on my analysis with what you're seeing, then fine. Then pick a spot and do what you have to do. But don't listen to anyone. Do your own homework. It's very, very important to be successful in trading and investing, okay? So for that matter, I do believe that we're probably completing a fourth wave minor pullback for the larger blow-off top, capitulatory top, the unbelievable rally, 27 times earnings. I mean, through the roof, crazy, just buy them, rip your face off rally. That's what the mutual funds, the portfolio managers, that's what they want because they're so long in the tooth. And I keep saying that the market is not long enough, meaning they're long enough, they want to get the retail in so they can get out at higher prices, okay? And it is no denying that. I'm telling you that's what it is. Now, if in fact this fourth wave pullback really is a fifth wave completion and we have started the descent, we need more evidence. And of course, I will bring that to you guys on a regular basis. I will bring that to you as soon as I find out, okay? Right now, there's not enough evidence either way. The market in itself is kind of neutral with a slightly bearish bias, but nothing to say, let's go short the market right now, okay? So we pick our spots intraday. We try to make a little bit of money. You hit singles and doubles, and you move on to the next day without doing any overnight risk. And if you guys are holding overnight risk, be very, very careful. All right, let's get right to it. Enough of my soapbox. Couple of trades. I just want to show you what we did here. This is our Pro Trader Premier video along with our Viper algorithm, and you can see here we had a short signal here, and actually we went all the way down to 54.15. Nice trade, great trade. Next, here is the ES. This was the other day. We had 23.54.25. This was our long, and I just want to show you where we are because we had another signal same day on 4/7 last week, 23.59. We had another entry long. So right up in here, we just took out 6 points, 6 and change, within a matter of, I'd say, about an hour. Okay, and then now we hit our target. We're looking for higher prices. Pro Trader Premier video along with our Viper and our trading room analysis. Here is gold. Okay, you can see gold up in here. Beautiful trade. I tweeted this out. 1266.90. Sure enough, it hit it way below before it cracked. Unbelievable trade. Now this doesn't happen every day. I'm just going to tell you that this does not happen every day because price does not react to that. At least of late, we've been on. We go into consolidation mode. Then we go back down again. But look what's happened. We rallied all the way up. We went sideways, and then we went in sideways going into the new day, and then we just dumped again. So great trade. We had Pro Trader Premier Video subscribers, and we had our trading room doing fantastic. Okay, Now let's get right to analysis. I'm not going to keep you guys, but I want to just show you. I've shown this to you before: divergence, convergence of the VXX and the XIV, which basically you're long the market on XIV. We're starting to curl up here. I don't believe it still. I do think that it'll probably do something like this. Now, don't get me wrong. Volatility is at extreme and decade lows, but I think we probably maybe go a little higher. This goes a little bit lower, and then we start going back up again. This starts to go back down again to converge, and then bam, this goes up, and this goes back down again. Again, we need more evidence, but this is what's happening at the moment. So pay attention to what volatility is doing. It will definitely give you some clues. Next is going to be the ES, and I've showed this to our subs. We have 23.78.75, 23.38. You can see here we've been sideways, and every time, and let me just open this up a little bit, you can see our negative divergence continues, right? Every time, look at the dojis that we've been in for the last 6 trading days. Absolutely insane. Just like we did here for 2 months, and if I go back, another 2 months. It's just, the trading has been dismal, other than the Trump rally for 20 days straight. It's just insane the way the market is reacting. But this is what we're dealt with, and this is what we're here for, to guide you and navigate through these waters. Okay, so 23.78, 23.38. If we lose this, we should hit the lower end of this. These are your daily trading actionable levels. Okay, NQ, same thing. We hit our proprietary price channels, our TMT, and now we're just sitting here stuck again. All right, that's why I'm saying that the market is neutral right now, with a slightly bearish bias. Crude oil, we talked about, we dissected the commitment of trader reports. They're coming out on Friday. And is this corrective, or is this another leg that we're going to start breaking out? I do not believe that is the case. I think this is more manipulative than anything, based on knowing that our oil producing nations need 50 plus oil to even break even, not even losing money. So they're going to do what they can to pop this market up. Remember, today is inventory numbers. Let's keep an eye on what's going on with the inventory numbers, and of course the gasoline build or draw. That's important as well. Okay, but these are your levels at the moment. I think this creates a great shorting opportunity. We have to let price stop. We have to let price at least start to go sideways or slightly lower, and then once that happens, you can start looking for short trades. Gold, again, that's why, guys, I just don't believe it. I think that's why they want everybody to get long gold and bonds, and then we get short the market, and all of a sudden something happens positively to the markets. It stops and reverts right back up again, and traps everybody that's long bonds, everybody that's long gold, and everybody that's short the market, and reverse. That just adds fuel to the fire for more and higher prices. Okay, but these are valid trades on your daily chart. Of course, we give them to you on our intraday charts, our Pro Trader Premier video research videos. Okay, this is great though. This looks great. We took out the one area. If you remember the 23.75, we took that out. Okay, and this is important. We also took out the neckline. We need another day or two of closing above this neckline, and then take out the swing high ultimately, and then maybe we might be off to the races. But I need more evidence to get crazy long on GDX and of course gold. ZB, which is the bonds, you can see here. Again, we need another couple of days of closing above this area of resistance, which would act as support, and then we'll look for a gap area resistance for the target of ZB. Same thing with the TLT. Just want to show you the ETF. Okay, pay attention to the 200 at 128.10. Okay, these are valid zones for today's trade. Spiders will go right into the ETF. Again, hit exactly to the T, the 50-day moving average in light orange. You can see that here. Okay, and upper end of the range, same thing. But look what's happening. We've been range bound for at least 8 trading days. Okay, dismal type of trading, but not when you have the Pro Trader Premier videos and our levels, guys. Once it bounces off of that, the subs know what to do. The transports, same thing, range bound trading. These are active levels for today's trade. Again, if we lose this area here, that swing low, look for a big flush into this zone area here of 146.25. Remember, this is our leader. It's not leading, but it's not also selling off. This is another point I'm trying to make. So I would not get crazy short to the downside, not yet, until we see more evidence. And this is what we're here for. And even if there's no trade right now, and you're not intraday trading or swing trading, just back off a little bit and let's see what happens. Another thing, IWM, big engulfing green candle. All right, this was the strongest today, which it was the weakest. Lower lows and lower highs still staying into this downtrend channel. Wait till we see if we break back above it. This could lead us out into making additional highs. So again, careful, use caution, be in the short side here at the moment. And last is going to be your Qs. You can see that here. We really haven't gone anywhere. Amazon took it on the chin. Google, a lot of the big cap tech, which is surprisingly, it's refreshing to see something like that because they're grossly overbought, which is not a sell signal. However, you never want to put money, good, strong money to work when something that is so overbought. Wait for a pullback. It will happen. Have a great day, everybody. We'll see you tomorrow. Take care.